Hello everyone and welcome to this small talk where we are accompanied by Luke from Toros Crypto.
Hey guys, hi.
So LSP, Luke and I will be going over 3 of the projects that we really like fundamentally. It's going to be our favorite crypto concepts and why. And we'll be starting with LSPs, which is
Pax Gold. And I know most of you are probably thinking, what? Why not Bitcoin? Why not, CHSB? Why not this? Why not that? I have been an avid, investor in gold for years. I've been accumulating physical gold, physical silver. I tried to get my hands on some platinum, but that didn't work. So we'll just forget about that. But Pax Gold, the actual concept of Pax Gold, incorporated into cryptocurrency makes a lot of sense. And for me, having that kind of background with physical, the actual physical shiny metal, and what that can be used for, how it's, a good store of value. It's a good place to put your wealth, especially during turbulent times. When I first was introduced to Pax Gold, it made a lot of sense to me straight away. There are some, I don't want to say negatives, but there are some things to think about, in terms of, the actual concept of Pax Gold, which I'll go into briefly. But, as you can see on your screen, we're going to kind of run through these and we're going to have a good look at why, for me, Pax Gold makes a lot of sense. First of all, it's trusted. Now, I'm going to pause for a second. I'm going to explain something. When you put your money in a bank, it's very easy. If you go back, say, 10 years, and you look at normal high street banks, for example, there was a time in pretty much almost every country where it was the normal course of, the normal course of a day, a week, a month, in business, personally, to just deal with a bank. You go to a bank, you put your money in a bank, everything's fine. There was never any real issues, maybe some administration problems from time to time, but generally, banks ran smoothly. Nobody had any problems. Life was great. But as times have sort of become more turbulent throughout the years, and we've come to a point, especially during this pandemic, where globally, literally the entire global economy was shut down practically overnight, and economies have suffered throughout. People have lost a lot of trust, and this is not just because of the pandemic. This is something that's been happening for years. After 2008 subprime lending crisis, all that nonsense, we've got to a point now where I would say 50 to 60% of the people that I speak to don't want to use banks. They hate banks, whereas before that was never the case. So when you see something like Pax Gold, it's very easy to just think the same way. It's just another, whatever. I don't trust it. How do any of these things make sense? Which I'll go into. But the New York State, see, it says trusted, New York, NYFS. Pax Gold is NYFS regulated, which is basically the New York State Department of Financial Services. And they have a very high standard when it comes to their regulation. Before we came on, and I never knew this, but Ben explained to me that USDC actually didn't get I don't know if it's certification, but regulation by the New York State Department of Financial Services, because they couldn't account for every single dollar that was backed with a USDC token.
USDT.
USDT. So this is important because it just goes to show how stringent, they are with their regulatory makeup and the way that they do things. So to be regulated by NYFS makes a massive difference, in terms of confidence, in terms of, trusting them. And we have to kind of, at some point, switch our thinking to being able to start to trust these new ideas, these new concepts, these new technologies that are, becoming available through the crypto space. Because if we don't, we're going to lose out on many great opportunities, whether it's investing or whether it's just, anything else that we do in the crypto space. Pax Gold is redeemable, okay? Which means if you buy one full Pax Gold token, depending on the price of gold, and we'll just say for argument's sake it's $1,800, okay? So $1,800 for one troy ounce of physical gold, okay, is represented in one Pax Gold token. Now, if you decide one day, do you know what? the token's great, but I actually want the shiny metal. So I'm going to go to a location designated by Pax Gold, which you can find on their website, and you can exchange your token for the physical gold. So every time you buy Pax Gold tokens, that token is a part of a specific bar of gold, or not bar, but 1 troy ounce of gold, which means there's no way that you can say, well, it doesn't exist, or it's not yours, or it's not that it's that one. That specific troy ounce belongs to you, and it's paired with your token. Okay, so you can go down there, you can receive your physical gold, you give them the token, and everybody's happy. You don't physically hold the token, obviously. We're talking about cryptos here. So it's redeemable for the physical gold. It's backed by the physical gold, which is held very securely. Okay, it makes sense. If you look at investment opportunities, okay, there are so many different ICOs, there are so many different technologies, ideas, new tokens that are coming out pretty much on a daily basis now. It's actually quite insane how many coins are available if you do some research, but most of them don't really amount to much. And when you do find one that really piques your interest and actually does something that makes sense, in terms of utility, in terms of providing to the community and so on. And in this case, we'll talk about CHSB. We know it provides for the community and it makes sense. Those types of investments can make you, a lot of money in a very short period of time. Okay, and this is something that we see happening across the board. If you go back over, the course of the crypto space as it started to unfold and become bigger and bigger and bigger, you see a lot of this. People buying into concepts that in some cases they didn't even understand, and then bang, off it goes. The reason I'm talking about this is because when you look at Pax Gold and the price of gold generally, it's quite stable. It's not erratic. Yes, gold, spot gold, if you're trading spot gold, it's extremely volatile. Or if you're trading futures gold, very, very volatile. But we're not talking about that. We're just talking about the general the general price behavior of gold over years and years and years of time is very stable. It appreciates in value, generally every year appreciates in value. It's nice, it's steady, it's safe. Yeah. And because of that, when you come across Pax Gold and you said, you know what, I'm going to start to, and one of the best ideas that that was actually introduced to me, and it's very simple, it's very similar to a standing order, was to just start to accumulate small amounts of Pax Gold on a weekly or a monthly basis when you get paid. Even if it's a pound, even if it's $1, even if it doesn't matter. Just grab a little. And eventually you will get to a point where that is effectively like a savings account that is backed by physical gold that you can go and retrieve if you want it. Yeah, so it ticks a lot of boxes. Everybody knows what gold is. Everybody can see the value in gold. Everybody can understand the concept of what gold is, and you can track gold throughout history all the way back to you're talking what, pre-Christ, BC. Gold has been around forever, effectively, and it has many, many uses. Not to mention, it's a fantastic conductor of electricity, because I mess around with electrics. But it makes sense. It makes sense in terms of safety. It makes sense in terms of a nice, steady growth over the years, and it's made very easy now to actually buy physical gold without having to store it yourself. Okay, and which leads me on to the next thing, which is fractional ownership. You don't have to buy one full token to be part of or to be involved in, Pax Gold. You can buy it fractionally, small amounts. It really doesn't matter. Now, there is a caveat to this. If you're buying from the Pax Gold website, there is a minimum of $15. So you can't just buy like $1 or whatever. But if you use, the SwissBorg app, for example, or whatever, you can exchange your fiat currency in pretty much any amount that you want. I believe it's $1 or a euro or a pound, if my memory serves, for your Pax Gold, which makes it a bit more accessible. Some people may not have $15, for example. But you can fractionally own it, and you can build up to that one full token, which will be 1 troy ounce of gold. And then commodity alongside crypto. This is something that has obviously been fused together now. Before, when you were purchasing the physical commodity, you would either have to go to a jeweler's or a bullion supplier in Birmingham over here in the UK. There's a place called the Jewelry Quarter, you know, in London, it's Hatton Garden. And these places are full of jewelers, bullion suppliers, you know, and so on, where you physically walk in, you say, look, I'm, you know, looking to buy some gold. You buy the gold, and then obviously you hand over the cash or make a transfer, and off you go. Now you're able to physically pick up your phone, and within, let's say, a minute, 2 minutes, you've picked up some gold seamlessly, easily. Transaction costs are very low now, instead of the premiums that, you know, some companies put on the physical commodity, you know, which can be quite high sometimes. So it's spot gold price plus, say, 3% or 4%. Now, the more you buy physical gold, the lower the premium becomes. So if you're buying, say, 1 troy ounce for, say, £1,400, if you buy 5 troy ounces, it might go down to, you know, £1,392 per troy ounce. It may not seem like a big saving, but if you're buying large quantities of gold, it is a huge saving. But the premium is still there. When you're dealing with Pax Gold, that's simply not the case. You know, the transaction costs are very low. It's more accessible. It's more accessible to the masses. Everybody can get involved in Pax Gold, and everybody can start to invest in and slowly accumulate the token, which then corresponds to the physical commodity. And that's me on Pax Gold. I hope everybody enjoyed it. I'm going to hand it over to the other guys.
Okay, I guess my turn. Hi everyone. I'm Luke. I'm primarily a trader. So I'm just from a fundamental perspective, I'm looking more at things that trade well, and as well as just from an investment perspective. But I do take a look at fundamentals of coins as well. And one that caught my eye early last year, really, and I've been accumulating since, is Quant. So that's QNT is the ticker for that. And I first got interested in this as a project initially because of the chart. Okay, so I was looking at charts, and I just saw something that had a really nicely well-respected range that had been going on for about 3 years, which to me shows that there's a big accumulation going on with the project. And if I see something like that that's not massively spiking and then dropping 90%, spiking, dropping 90%, it kind of says to me that maybe this is something a bit more serious and I should look into. So I came about it from like another way of just seeing a chart and then being like, oh, this is interesting, I want to learn more about the company. But basically with Quant is they develop, or they're helping to develop, they have this thing called overledger technology, which is, I guess, the cross between traditional finance and blockchain. So what they've kind of made their niche is to work with traditional finance in order to get blockchain technology and kind of like this distributed ledger technology, DLTs, into traditional finance. They helped to develop a blockchain protocol, which a lot of the kind of major banks around the world use. So this is the blockchain ISO standard TC307. I'm not entirely sure what that is, but I know that it is something that's supported in 60 countries around the world for blockchain development within like traditional finance. So they're working with people like the Federal Reserve, the Bank of England, UK Ministry of Justice, and other companies to like incorporate blockchain technology into their businesses. But they're also a token that can be traded and held and invested as well. So that there is a value that comes from the token itself, like if there's a transaction or their overledger technology is being used within, say, a bank or within a company, then there will be gas fees with that, similar to how Ethereum works, that then generates like value for the network. So I thought this was really interesting, just because I kind of, before the bull run and everything that we've gone through this year, I was thinking very much like this kind of 2021, 2022 time is when I wanted to see like crypto mature into kind of a more regular more regulation, and just being more widely accepted into the world as like, okay, this is serious technology here. There can be value with traditional finance and the crypto space. There can be that partnership there, and I really liked what they were doing and creating these partnerships. So yeah, I started investing into this quite early on, just seeing it in a range. So it was, I'll have to have a look at the chart again, but for let me have a look. I'll pull this up. Okay, but for about almost 3 years, it was just hovering around between like $12 and $6, which a 50% range in crypto is tiny for that, especially for that to be there for a couple of years. And within that time, they were just working on developing the technology and everything. And just as obviously price exploded this year, they're one of those few coins that seems to have bucked the trend recently and is just continuing to move on. So now that they've had that whole development phase, the whole accumulation phase, it's starting to see really nice moves higher. They're London based. So on the slide here, they're a London based company, and myself being from the UK, I kind of liked that about them as well. They've just like a bunch of partnerships out there. They have partnerships with Amazon Web Services. It's compatible with Ledger 3, which means you can use it for web-based payment solutions. So with like the new Ledger technology, you're able to, I guess, connect that up to act as almost like that link between fiat money and cryptocurrency. So yeah, overall, just a project that I think is really interesting, and the price as well just seems to be reflecting that, which is quite cool as well. I'm not sure I have anything else to say on this one.
All right, so then I guess I'll take it from here. After the company that's aiming to close-in financial institutions with cryptocurrency, I'll be talking about the project that's trying to do the exact opposite by replacing everyone altogether, which is a little ironic, but a project that I really liked and found extremely interesting while I was researching it for a YouTube video is Cardano. Cardano is basically a massive community-driven project that's going to be basically changing itself according to what the market needs and what the people want. So people will be deciding everything, and that's something I really like about a project. It's when the community actually has a word into how it's going to evolve and what is needed for it. So a few of the really cool innovations that they've set into place are Haskell. First of all, they haven't invented Haskell, I don't think, but they've been using this programming language to run the whole blockchain. And the big difference between this programming language and another one is that with this one, you'll be explaining to the computer how to do something rather than what to do in case a certain event or specific event happens. So the computer is going to have a better understanding of what it's supposed to do and the objectives that they've got to accomplish, and that makes it a lot more reliable and a lot less easy to hack. As I've mentioned before, it's community driven. This is something that I really like. I love, for example, the fact that in SwissBorg we're able to, if unhappy, shout and they'll listen to us. For example, when they wanted to do this new premium tier that was too expensive and everyone said, why the heck are you doing this? We want a cheaper one. What did they do? They got the community premium up, and that was 50 times cheaper. So they actually listened to us, and this is something that Cardano does as well. This is something that I really like. It's a third generation blockchain. This isn't really an official term, but basically it's going to be solving problems that Bitcoin and Ethereum has had in the past, which are mainly going to be scalability, so the speed of everything, the whole process, interoperability, the fact that it's able to be worked on by a lot of people in a lot of programming languages and basically a lot of methods. It's going to be its capacity to be modified by a lot of different technologies, and sustainability. So all of these people that are working on the project and giving their opinions, they're not going to be doing that for free or for nothing. And the treasury has to have a sustainable inflow of money. So they found a way with the fees of each transaction to feed that treasury, which is sustainable. Another thing that I really like is basically their leader, or you can call him guru if you want to, if it's fun. So basically he's called Charles Hoskinson, and when you listen to him you really understand how much of a genius he is. I don't think he gets enough credibility for everything innovating that he's doing and everything he's leading, but he's very, very good at what he does, and when he explains something, it can be as complex as it gets, but even idiots like me can get it. So it's really reassuring to see someone at the head of a project that manages to explain very complex stuff to very dumb people. And the last thing that I really like is Ouroboros Hydra. So this is a solution they came up with that makes it even more scalable than it was at the very start. Basically, Ouroboros Hydra allows Cardano to have multiple inputs of transactions. So instead of basically having only one place you can write transaction in, you can have multiple ones, and this allows you to go a lot quicker. It's a lot more complicated than that, but this is going to be the basic explanation. And all of this is like not even 10% of the whole project. It's an enormous thing that's happening everywhere, and a lot of scientists and very important people are working on this. And I just think it's amazing to have so many big brains working on a solution to finance, and just like SwissBorg is doing, trying to bring something new to the market. And this is my part. Now we'll all three of us hopefully be going over fundamentals. I've annoyed Luke a little bit in his live streams recently about fundamentals, and as he does trading on his live streams on YouTube every Friday and regularly every week, I've been asking questions like, but don't you think news can affect fundamentals, which will then push the price up or down, which is, well, quite the opposite of graph analysis when something pumps a token out of a news article, for example, or Elon Musk. Graphs can't really predict Elon Musk, I don't think. So it was quite fun poking that stuff at him and his community, which isn't really used to these kind of, let's say, off-topic questions.
Yeah, see, we could have a good little debate on this.
Yeah.
Because yeah,
this is gonna be interesting. Go on, Luke.
Here we go. No, so I do some fundamental analysis. If there's something that I want to hold for a long period of time, then obviously the fundamentals play a huge part in that. I'm not gonna just put my money into something that is awful, like because there's a lot of scams out there. So I do like to do my due diligence and know what I'm putting money into, especially if that's like a long-term hold. And it's funny actually that you mentioned Cardano on this, because again, that would have been, if you'd have asked me this like basically at the end of 2017, 2018, that was another, I learned about Cardano in very much the same way that I found out about Quant. Whereas with Cardano, I'm just going off on a bit of a tangent, but I can remember I was trading over on Bittrex and suddenly everyone got airdropped this ADA token. I had no idea what it was, but then I started researching it because of that and found out everything about just how much of a serious project it is behind the scenes. And that for me was the one that I was accumulating throughout 2018, 2019, kind of being very confident that this is going to be a project that will really take off. And as we've seen this year, like it has done so massively. So I think fundamentals do play a huge part, especially in informing when conditions aren't great in the market and they're not so tradable. It's informing you of what's a good thing to accumulate ready for the next time that the market starts to pick up again, like we saw this year. But as for the Elon Musk thing, it's quite interesting because every time that I have seen a tweet or a piece of news come out, and this goes for the Elon Musk tweets, this goes for the China mining ban tweets, this goes for the Binance FUD that we've been having recently, I could point you to a place in the chart where price was sat at, like, in the case of how it's been recently with the FUD, price has been moved down into an area of support, and the news is almost released in order to break that support and create panic in the market. So it's a crazy thing. Like, there's clear manipulation in crypto, because it's just an unregulated, it's the Wild West, and you're a lot of the times at the hands, I guess, of people with a lot more money than you could really imagine having yourself. So I find it interesting, like the news definitely has a part to play, but also I think they work hand in hand with the technicals, is that it's strategically released in order to have the biggest effect possible on the market. Like some of this China FUD that we've seen has happened outside of China business hours. Like apparently a bank shut down all their crypto services outside of their trading hours. It would have been like 2 a.m. in the morning when they released this false statement, which turned out not to be true, but it caused a 20% crash in the market. And yeah, so I think there's the fundamentals, the news-driven stuff, and the technicals, that there's like a relationship between the two, is that price news will be released based on the chart, which then creates which then affects the chart more, and then it's that cycle in the two.
I agree. And what's interesting is, because everything that you're saying, obviously, the guys that are watching this and they're used to me talking know that I subscribe to pretty much everything that you've just said, but even to an even more extreme. Yeah. I made a call on Bitcoin about, I don't know when it was, a month and a half before Elon Musk tweeted that he was going to stop accepting Bitcoin for Tesla.
Oh yeah.
And you know, it was about a month and a half before that flash crash. I'm not even going to call it a flash crash. It was just a run for liquidity, really. But when you are able to do that, my question to everybody at the time was, how am I able to do this before it happens, before these tweets come out, before this nonsense from China comes out, before the news says anything, and so on and so on and so on? If, one, it wasn't possible, two, the markets weren't manipulated, and three, it's just constantly transferring wealth and accumulating at levels they want to accumulate at. You know, the markets are absolutely 100% heavily manipulated. They just are. There's no question about it. My argument with people who are heavily into fundamental analysis is, to the people that don't understand what type of fundamental analysis that actually is, there's a massive misunderstanding when it comes to fundamental analysis. And these are just my thoughts and opinions, obviously, but there's a massive misunderstanding when it comes to fundamental analysis, because it's always tied into the news, you know? And we know, excuse me, sometimes when the news is released, you know, let's say quarterly earnings, for example. So you get some earnings released, they smash expectations and the stock goes down. Why? How does that even make any logical sense? It doesn't, you know. And over the years, when you start to really sort of knuckle down, I'm not saying chart reading is the only way to do things. It isn't. I know people who just trade the news, but it absolutely works. And it's definitely, you can see the spots. I know you know what I'm talking about, Luke, and Ben's seen me do this many, many times. And yet, Ben is able to understand the fundamentals in a way that I simply just cannot understand, you know, and he makes that work. So it's the trader, man. It's the trader, it's the investor. It's always going to be the trader and the investor that can make or break anything that we use. They all have validity, I think, and they all have value. It just depends on how you use them. What do you think to that then, Ben? Have you got 2 against 1?
Well, no. I mean, the fact that I poked the question, I definitely know that there's some manipulation in the market. It's as Lucas said, it's unregulated, and at the moment, it's just too easy to mess everything up. And it's quite certain that smart people like Musk and China, they don't do things randomly. He doesn't just go and tweet some random nonsense that just doesn't make any sense just to have fun. That's not what's happening. Not with these amounts of money behind it. He knows what he's doing. Obviously, he's not a dumb man. He's got I don't know how many degrees, but he's smart. He's quite smart. And China, they always do that. And I've called it. I called the shots when we were on the Smart Talk just before it happened. China had just announced this news, and the market went down or something like 50 or 40% or whatever. And I said, guys, they do this with stocks all the time. China hits twice. Once it's to shake the trees, and the second time it's to scare you off. So It's going to happen again. We're going to fall in the next 2 weeks. I didn't know how long it was going to take, but they did this with Baba. They done this with stocks for ages. And I said, guys, it's going to fall a second time in the next 2 weeks. Just don't panic, don't sell. It's going to go back up straight away. And the next day, well, I didn't know it was going to be that quick, but on the next day, we saw this minus 80% fall. That was just crazy. And everyone was going mad. And I was like, just hold, because it's going to be okay. This is just China manipulating the market. They always do that.
That was tough. I mean, we our fingers were going 100 miles an hour in the chat. We were just trying to calm people down, just relax.
Yeah, but remember, on the next day, we had these screenshots for a few minutes. We had these screenshots of like CHSB plus 95%, and that was really cool to see. And people that held and didn't that one squared off thanked me, because they were like, I was like a second away from selling, and you said don't, and I took the leap of faith and trusted what you said, and now my portfolio is back up 90%, whereas if they had sold, it would have just been bought off by some Chinese guy with billions and billions, and that's the end of it. So definitely there is some timey, manipulaty thingies in the market. But to me, the projects that will come back and last with a long-term value, it's not going to be Dogecoin or Shiba. I don't think in 10 years they'll be at $20. I think the ones that will be coming back up in case there's a massive bear market, I'm talking like winter, whatever, the ones that will come back up are probably the ones that actually have a purpose and that people buy for a reason. Or at least you'd probably feel safer if your portfolio was made mainly with these tokens that actually have a value, an intrinsic value behind it. They're actually useful, and people will buy them for a reason, and other than just fun or because it's going to go stonks, you know?
Yeah, exactly.
Yeah, there's definite opportunities with by doing fundamental analysis and things. Again, it's that relationship between the two things. During a bull market, it's like the charts take over and everyone's trading. So most people just become a trader. They'll be buying stuff and things will just keep going up, and they think, okay, we're genius. We can make money from this. As things start to turn around and we go into kind of conditions a bit more like we are now. Like I'm not saying we're in a long-term bear market, but we are in a bear market at the moment. It's just a bit of a shorter one than maybe because we've come down so fast so quickly. It surely can't keep doing this for years. But at those times, it's when fundamentals start to play a really key part. And we saw in 2017, 2018, the good projects didn't fall anywhere near as much as the bad ones. It has a massive shakeout of the stuff that's just clogging up the market, the meme coins, the stuff that doesn't really have any value. And you saw it with Link in 2018. That had its bull run when everything else was having in a bear market, just because it had a real life use case, and it was kind of driving a lot of the kind of development and everything with blockchain technology and it actually being used in the real world. Again with Cardano, yes, it fell a long way, but it went through a long accumulation, had a nice move up, and we're seeing that kind of thing again now, where the good projects aren't being hurt that much. So I don't personally know anything about Pax Gold, but I know with Quant, that's had, I think 100%. It's up 100% since Bitcoin's all-time high in dollar value. So that would be up 200% against Bitcoin, because obviously we're 50% down on Bitcoin at the moment. Cardano's holding up well. I think it's still above $1, and it's not really seen as much of a crash as other stuff recently. So the good projects hold their value quite well. SwissBorg, again, another one. It's in a range, like a long-term range, and it's within, I still think with SwissBorg that it's in a long-term accumulation as well on that. And
what's interesting, not to cut you up, but it actually helps with relative strength plays as well, and to actually spot these, it makes it very easy to spot what you're saying. So when the market is in this bear market, when we do have these crashes, when the market is manipulated and this silly news comes out and so on, if you just scan through the entire market, how easy is it to spot these opportunities and say, wow, this company's not, that's not going down. This isn't going down. That's holding very well. This is actually going up, And then as you start to break each of these down, you can see that huge relative strength relative to the entire crypto space. And it makes it so much more easier, right, to have faith in whatever that company's producing, trying to change technologies that they're bringing to the market, the utility that they have. So I wanted to kind of throw that in there because there's opportunity in everything. When everybody sees a sea of red, they panic. The majority of investors, especially new investors who are new to the crypto space in general, they panic, they sell, they let their emotions get the best of them because they don't have, the maturity or the psychological maturity to deal with this and these things that happen to them, and it's fresh to them, it's new, they don't know how to handle it, so they just sell because they don't want to deal with the pain anymore. But yeah, it is a learning curve and it's a growth curve. But if you look at every opportunity or every bad thing that happens in the market and use it as an opportunity to kind of flip things around and say, okay, look, yes, things seem pretty crappy right now, but what's actually doing well? It's easier to spot.
Yeah, for sure. And I think that's the thing. Like if again, like SwissBorg as an example of that, it's you can look at the chart here, and I've just kind of pulled it up on my screen, and you can see how it's just holding above where previous resistance was, and there's nothing bearish at all about the chart. And the project itself, when you see things like this that aren't just completely breaking down and crashing, with here it's a fairly big range. We're from 1,400 sats to 2,700 sats as a range. With its US dollar value, I'm not quite sure. I was just looking at the Bitcoin chart to see how it held out, but I mean it's a nice.
Yeah, it's effectively around about sort of 70 cents to around about sort of 40-ish. Yeah.
So to be playing a it's at almost 100% range, but that's pretty standard. You double in price, you half in price. That's an accumulation in crypto, which is mad. It's mad to think that it can like go down 50% and be an accumulation. But
this is the point. As it's coming down, even from all-time highs, as it was coming down, and when I was doing my sort of personal view, and when I was looking into all the flows and how things are moving around, it's all being accumulated on the way down. Mm-hmm. The pockets of liquidity are on the buy side. They are. There's just, it's not a maybe. The math doesn't lie. It's all being accumulated buy side, especially in the last, I'd say, from around about the end of June up to where we are now. These last 2 weeks, there's just been a huge amount of accumulation on CHSB. Which a lot of people will say, well, how do you know? You can't see the orders. Well, you don't need to be able to see the actual orders. The chart tells you everything you need to know. It is being heavily accumulated. And when it pops, me and Ben were discussing this before we came on tonight. We believe it's going to be pretty spectacular, but we'll see. That's not financial advice, but
no, not financial advice, but we are seeing all-time lows in circulating supply, and that's quite reassuring. I think we're at around 200 million right now. Which basically the least supply you have, the more volatile it can get. Because as people will be accumulating, if there's a bull run or whatever, it will just be much, much stronger than it was in the past. I don't know if Luke, you can confirm all of this, but less supply.
It's like it's like that analogy of holding like a beach ball underwater. So like the deeper you hold it, and not the longer you hold it, but the deeper you push it down underwater, like when that shoots up out of the water, it goes crazy. And that's the kind of thing, is that when you have this suppression of price for such a long time, and it's happening on Bitcoin as well, it doesn't mean that I think Bitcoin's necessarily going up from here. But what we're having right now is a pretty controlled, slow grind down into support. And this is allowing accumulation to happen. It may drop out, but there is certainly, with Bitcoin, with a lot of the majors, with SwissBorg, there's a lot of accumulation happening at the lows. And the thing is, if you want a lot of money, or if you've got a lot of money and you want to invest a lot of money into crypto, it's a very illiquid market. You can't do that all at once. So if for example, there's been rumors with Apple and Bitcoin, if they wanted to buy Bitcoin, there's no way they could do it all in one go at one price. Otherwise, they'd cause an enormous increase in price and it would just wreck the market. But if they can keep saying, okay, I want to buy Bitcoin around 30 to 32K, they can tell the market makers, because we have market makers that can engineer moves down in the price. They can create panic. You can release news to create panic, to keep on just driving this price down. And they'll have their orders set there. They'll have limit orders set there, and they'll just be buying it up every time it comes down into this area. Just be like, okay, thanks. We'll buy a bit more. We'll buy a bit more. So not to affect the market. And then when they're happy with their position, they just put the brakes on the selling and allow that buy side pressure. You change market structure once, you allow that pressure to move price upwards, and you can see a really, really fast reaction off of that. Now, I don't know if that's going to happen now or whether we need maybe one final shakeout. I think that's very much dependent on what smaller retail investors are doing. I don't think there'll be a move up until the majority of people give up. Which is nasty. Like as someone like new to the space, the way that the big money is going to play this is they're going to like really, really kind of get you to that point, that breaking point, and find the market's breaking point where everyone believes that it's going to go down. And when that happens, it will just reverse the other way. And you see it all the time.
Well, I'm going to call it now because I'm just pretty not arrogant, but I'm a bit of a tester like this. I can honestly, I've got a very strong conviction that we're going to see sort of 25,000 on Bitcoin at some point, and then probably shoot back up to 44,000 because there's a huge imbalance there. So you know, this is, if we hit 24,000, we're probably going to see sub 20s, to be honest. I did do some analysis on this a while back, you know, and price did pop a little bit. It's kind of bouncing around between all the areas that I was looking at. I've been tracking it for, you know, for a very long time, all the way through this entire sort of crash, sideways, you know, accumulation. And I was saying what's interesting is on the way down, it is actually accumulating buy-side liquidity, a lot of it as well, which ties in exactly everything that you've just said, by the way. I agree with 100%, you know, and it is what's happening with Bitcoin. And what's interesting is something you said, which I find very hard, you know, to explain to people. And I hope the way that you've just explained it really resonates with people. It is what they do. They get you to that breaking point. And the way that they are, you know, that they do this is becoming, they have to be more creative with the way that they push people's buttons and really play on people's psychology, because people are getting smart. You know, as time goes by, people are getting smarter. The younger generation are a lot smarter than, you know, than I was when I was, you know, I mean, my kids are super wicked smart, man. And I'm like, how do you know this stuff? You know, when I was their age, I was outside throwing bricks at windows, and I shouldn't really say that, but we were running around being silly, right? But, you know, it's like they have to be more creative with this stuff, because ultimately, if Bitcoin starts to go down, a lot more people are thinking now, yeah, I'm just going to wait. That's fine. I'll just wait till, you know, and I'll slowly accumulate, and I'll add a little bit here and I'll add a little bit there. And to get people like that to breaking point, you have to do a lot with price. You have to bounce it around a little bit. You've got to release strategic news. You've got to drop price quickly, then snap it back to get people thinking, yep, this is the low, you know, and then they jump in, then it's a, you know, second run on that liquidity, and then it happens again, you know, then people panicking, you know, and it takes time to condition people into this sense of fear.
Yeah.
Until they just get out and say, you know, I've had enough. And then it all gets scooped up, and it's exactly what you said, bang, off it goes. You know, and people are going to be surprised. I honestly, I've said this, and I'm going to continue to say this. Before the end of the year, I think we're going to be very surprised on Bitcoin.
Yeah. Oh yeah, 100%. And I think as well is, I think the chart right now is really interesting, because I think it's really 50-50 what things are doing at the moment. We're either, it's a hard one to call, because right now where price is, we are at support, and this is important support. And if this holds, and then what price has done over the last couple of weeks is it's created a really nice structure for if we do get a reversal, even by 5-10%, that you could see a massive cascade effect that takes you back to 40K. But that relies on there being a bit of buying interest that comes in and a bit of strength to begin with. And that may happen again with fundamentals. You may need a news catalyst for that. But on the other hand of things, in order to break support, right now we're not seeing, there's no like aggression in the market anymore. People are so scared today. And they're so fearful for today, but it's a 4% move. It's nothing.
I know. Yeah. And that's the thing. That's where
a few weeks, like a couple of months ago, we were doing 20% moves in a day. And now we're 4% down on the day, and everyone's thinking we're going like, this is it. Like we're about to break massive support and we're going down to 20K. Now unless something major changes, there's just nowhere near enough volume for that to happen at the moment. There's just no aggression here from sellers, and it's really interesting.
Yeah, it is.
I'm sorry, we've kind of taken this onto a technical thing, but that's the thing. It goes with fundamentals as well, because the fundamentals of it are kind of what's driving the fear.
I knew we'd win. I knew we'd win. I knew eventually we would, by the time we're finished, Ben's going to be like talking like we are.
I'm trying to bring it back to fundamentals.
I'll be analyzing graphs and stuff. That's what I'm going to do that tonight.
I love it. We're going for a massive like cycle of FUD in the market without a lot of damage. Since all the FUD started, there's not been a lot of damage to the chart. All the damage to the chart happened before all the bad news came out. And again, that's what the relationship between fundamentals and news and price is that Elon Musk was still very bullish when we were even kind of all-time highs, and then the FUD started to come out after price had already seen this like big correction. And it's that thing, like the whole buy the rumor, sell the news thing. That's true a lot of the time, is that by the time news gets released, anyone who's got money and who wants to actually play that news will have already positioned themselves in the market beforehand. Like you can be sure that anyone who had a lot of money in China knew in advance that they were going to do the ban on the mining and things like that. They would have positioned themselves into short positions to take advantage of that.
Yeah, of course.
And as well, it's so predictable, because it's like you were saying earlier, like how you could call that Elon Musk would stop accepting Bitcoin payments. I mean, it's so obvious. Like the narrative of this whole cycle is so obvious. And I remember after we had the move, I was saying on one of the streams, like, I can guarantee you at some point soon, Elon will come out saying that he struck a deal with some mining company to mine Bitcoin using Tesla solar batteries, and so that there's a load of green, like, so that they're doing it in a sustainable way.
Obvious progression.
And we've seen that already. And the China mining ban happens every time. That again is kind of why I chose like QNT as my like fundamental project, because I think CBDCs and central bank digital currencies are going to be a major factor in the second phase of this
they
market if price goes up. So I think that's going to be a massive thing.
100%.
And also, there's other stuff as well. You'll have Tether FUD that will come out, and that'll be once like the market finally tops out.
It's already started. There's actually a video by CoffeeZilla who talks about Tether, and it's a very interesting video actually. It's just search it up on YouTube, but it's already started. 100%.
And that's just used to scare people out of going into Tether. So they're like, I don't want to hold Bitcoin because Bitcoin's going down, but I don't want to move it into Tether because Tether might implode. And then what do?
It's all, for me, this is why I've trading, investing, charts, everything. It's all been a passion of mine since I was 16 years old. For the last 25 years, man, I love it because you're playing chess every day. When I wake up, I'm playing chess with these people all the time, and my job is to try and stay 50 steps ahead. And I don't always get it right, but I am pretty accurate with a lot of the things that I say. My biggest gripe is when I explain this to people in simple terms, not saying I'm smart, but I'm like, how can you not see this? I don't get it. I don't get why you can't see what's right in front of you. Even something as simple as, and I try to explain it this way. If you see, you take advertisement, for example, Apple, Google, all these massive companies, you know, Amazon and so on, you know, they spend billions every year on advertising, yeah, and people, you know, we've got to a point now where the world is one giant television screen. Advertisements just constant all the time, and if they're able to affect, and people know that this is the case, if they're able to affect people's shopping behavior, the way consumers spend money and so on, you know, by using technology, by using, you know, advertisements, videos, you know, YouTube algorithms and so on, all this stuff, Facebook, everything, then why would they not be able to do that with the markets? Like, seriously, come on, man. You know, a lot of the things that we see on Facebook, for example, they're not even real. You know, some of these random, I'm sure all of us, well, the three of us have seen, I know I have, I'm sure you guys have as well. When you're scanning through YouTube and you're going through your YouTube feed, every now and then you'll see just like a little post, you know, do you think Bitcoin's going to 60,000, 100,000, 30,000, you know, and it's like a vote and people click. That's just data mining. These people aren't real. They don't exist. It's just data mining, and then they use that information, and it all goes into a I won't say quantum computer, but it all goes into the algorithm, which is very smart. It knows exactly what it's doing, and it spits out the information. Once it's done, it knows, okay, 78% of people think Bitcoin's going to 100,000, so we're going to drive it lower, you know, or whatever. And this is just an example. But yeah.
And also with advertising, I'd say with crypto and with stocks, the most effective form of advertising is the chart itself, quite often. So the chart is an advertisement. If you want people to buy something, they're not going to buy it when the price is moving down. So you can engineer that chart. If you're a market maker, and every asset has market makers in it, you can do that to allow price to move up and to come into a distribution. So what's the aim? If you're marketing something and you want people to buy it, what is your aim as a company? Is that you want to sell something. So if price is going up, the big money's thought there is that we want to sell this to you. Exactly. Coming up, the people who are holding a lot of Bitcoin are wanting to sell it to you. And the same way as if price is coming down, if you want someone to sell something, so the chart's really bearish and it's looking awful and everyone's selling, well, think who's on the other side of that, because every time you sell your Bitcoin, someone else is buying it.
Of course.
And
I don't know if you had a
form of advertising as well, which is
I don't know if you had a chance to go into any of the Clubhouse cafe, you know, like these Bitcoin cafes and all this nonsense. But in the last year, there was this, and this was before, you know, this sort of downturn on Bitcoin as it hit all-time highs. Think about the progression of what happened. Yeah, there was this implosion of Bitcoin. Michael Saylor, Elon Musk, you know, Clubhouse, all these people just, you know, sell your assets, buy Bitcoin. It's a store of value, so on and so. It was the same narrative over and over and over again, and it was so aggressive and so quick and so fast. I had people that were talking to me, because I know I've been doing this for a very long time. Even people that had absolutely no idea. One of my best friends, he calls me up and he's like, bro, I'm thinking about buying Bitcoin. And I was like, why? Yeah. And he goes, because it's going up and it sounds like a great investment. And he wanted to basically dump, you know, 50 grand in there. And I said, listen, call me back in a month, in exactly 1 month. I said, and we'll talk, you know, about this particular, you know, subject. He's like, why? I want to do this and that. I said, no, just call me back in a month. And he called me back in a month, and you know, Bitcoin took a little bit of a downturn, whatever else. And I said to him, within that month, I said, if you'd have bought Bitcoin with 50,000, I said, your 50,000 probably be worth around about sort of 42. You would have lost money, right? Because you're getting sucked into the hype. I said, just relax. And I said, and I promise you, I said, I will give you the money myself if it doesn't happen. Bitcoin is going to crash. I said to him, it's going to crash. There's too much excitement, there's too much going on, there's too many people promoting it, and the same numbers were coming out over and over and over again. These are the things that I was tracking: 60,000, 70,000, 77,000, 87,000, and 100,000. The same numbers over and over and over again, same time frames, same numbers, end of year, and it was constant. And then I was jumping on Clubhouse and all these people were saying the same things. Madness, yeah? And I'm like, okay, I'm gonna wait. And as soon as it breaks all-time highs, I'm going to short it, which I did. It was a normal trade. I spread betted it to the downside. because it was obvious to me, and when you get pulled into all of that nonsense, the first thing is you need to be able to recognize it. It's happening. I mean, how can you not see? Don't let your emotions get the best of you. Take a step back, because people, I mean, FOMO is the best, man. If you really want to hook somebody, the fear of missing out is so powerful. It's insane. As a psychological pull, as a primer, it's amazing, and unfortunately, when people start to go through that, and get pulled in that direction, they start to do silly things with their money. I mean, selling your house. I know somebody who sold his house, dumped it all into Bitcoin, crash, sold because he couldn't deal with the loss, and now he's I don't know, he's going for a lot of shit, basically.
Yeah, but to be honest, this guy has been into 3 or 4 smart talks right now, so I think that's a pretty big win.
Yeah.
All right. I don't mean to cut you guys off. I think the great conclusion out of this last 20 minutes we've been chatting about fundamentals is that it's a chess game. You're playing against people, and this is something LSP will be going over in the next week. It's others versus you. You're playing against people, and you really have to be calm and methodical about your decisions, and really have to be careful. And if you've got any questions, we're all here to help. Luke has also got on his Discord server amazing Bitcoin. It's more like Bitcoin trading, but they're still very, very, very smart people. You can always talk to. They're understanding and quite nice, actually. And
highly recommended.
Yeah, and you know us, so I hope you think we're nice as well. With all of that said, thank you very much for sticking to these smart talks, and we'll see you guys next time.
Take care, guys.
Thanks a lot, guys. Bye.
Cheers.